Hi, it's Matt Simpson here from Forex.com, and today I'll be looking at the Euro, Dollar CAD and Gold. Now, starting on the daily chart of Euro, it's clearly in a downtrend overall, but prices are now within a retracement phase. Now, we could make the assumption at the moment that prices might continue lower at some phase, but it's that summer time of the year for the US, so volatility is lower. But we can take a bit of a closer look at market positioning to try and gauge what could be going on. So on the left here, we've got a Euro futures weekly chart with market positioning for large speculators. That's net, gross longs and gross shorts. What's interesting about it is 2 weeks ago, they flipped to net short exposure, but they're not overly net short at all. However, if you look at gross short exposure, it is near multi-year highs. So from that perspective, it could be at a near-term sentiment extreme, but overall, traders aren't overly bearish and longs are also creeping higher. So it's a bit of an ambiguous scene here. But overall, there's a tint of bearishness. Euro could go low on the weekly chart if the US dollar continues to rise, but you also factor in that bets on Fed hikes aren't as confident as they were. On the right-hand chart, we've got asset managers who always tend to be net long, so it's no major surprise that they're still net long. But overall, they've lost about half their net long exposure since that peak in February, so there's some bearish clues coming through there as well. So if we make the assumption at the moment that futures traders are expecting a lower euro, but at the moment price action is choppy, perhaps now is not the time to be overly short euro. If we zoom in, we notice we had 3 consecutive lower days, but prices are now holding above 114. Perhaps that's quite an important level over the near term. And given we've had this quite choppy trade, maybe we'll get prices recycling higher within this 3-day range. But ultimately, given the long-term downtrend and the bearish positioning on futures markets, I'm wondering if bears may be looking to fade into such movements towards these highs or that monthly pivot points in the hope that that could increase the reward-risk ratio for an anticipated downside move. Of course, the biggest story here is if we do get a break beneath this June low, it assumes the bearish trend has resumed, and then that brings 113, the monthly S1, into focus. But given the clues on the higher time frames, perhaps it could fall further. Now, dollar CAD's an interesting one because it's got this really strong rally from the May low to the June high. It was ultimately in one single move. Prices, of course, have now retraced against that trend. The question is, have we seen the end of that retracement, or are we still within maybe an ABC move lower? Either way, it's looking bullish over the near term since we had a weak CPI report and President Trump has now threatened the Canada with a 50% tariff. But technically, what's interesting is we've got the 140 handle. We've also got the 50-day average, which provided support, and we've got this clear bullish range expansion candle trying to rally up towards that 20-day average, but at the moment it's found resistance around the monthly pivot point. Now, it's such a significant bullish outside day that it's hard not to consider it as a swing low. So the bias at the moment is, I suspect, bulls will be looking for pullbacks within this range here, hoping that prices remain above 1.40 and maybe get back towards that 2025 high. That still allows the potential for an ABC move lower, but of course, if we do see the Canadian dollar weaker against other currencies as well, that could allow the dollar CAD to continue higher, maybe even retest those highs. But as always, time will tell. So we'll finish up on gold, which to my eyes looks like it might be oversold at least over the near term. It's not printed a record high since January. I've already seen a pretty decent pullback. And more recently, we've got this bullish divergence in the oversold zone on the RSI 2. And if we zoom in, we've got this doji, bullish hammer, and prices trying to hold above 4,000. In fact, you zoom in there, you can see we've got a lower wick. We've not seen a weak close beneath it, and momentum's already turning higher. If we look at the daily chart, momentum is trying to pick up here. But again, it's that time of year where price action is fickle. I think it's one of these market environments where it lulls traders into false moves, and then we get these fake outs, breakouts, reversals, and then the real move happens. And in this case, I'm hopeful that this isn't the beginning of a strong move, but maybe we'll get a pullback towards 4,000. And again, if you look at the daily And again, if you look at the price action, we've had several failed attempts to close beneath it, and we had a single close beneath it on Thursday, the 16th of July, and momentum's already reversed above that. So to me, it would look like we've got some sort of a bullish accumulation going on, and therefore my near-term bias is to the upside, but hopefully we'll get some sort of pullback towards 4,000 first. Not looking for any significant here, but maybe move up towards 4,200. But again, we shouldn't lose sight of the fact that this is in a downtrend technically. And if you're looking at counter trend trades, sometimes it's wise to expect less because it is vulnerable to false moves and choppy price action. As always, if that's useful, wish you best of luck with your trading.